say, do something so I know that you're here. Just you can put I'm here or put a 1 in the chat that says, that you're here so that I know who I am talking with tonight. I would, love to make sure that I have somebody I'm talking to, even though you all will see it on the replay. So if you didn't get it, you're not doing it live and you happen to hear it by replay, then please put replay. And if there's ever any questions that you have, please, please, please put those questions either in the chat on one of the videos, or you can always do an instant message and I'll get the message and make sure that I answer. All right. Hello, 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 hello. Again, let me introduce myself. I am Tanya, your insurance professor. And what I do is that I help professional women seeking to make a career pivot, make that change into the financial industry, learn how to control their time, their income, and career while making a difference in the lives of others. And why do I say in the lives of others? Because this insurance industry can make a difference in someone's life. We have a tool that can make a person wealthy if they are interested in really making a difference in their own lives. So it is, that is what I do. And as an instructor with Get Skills Insurance Academy, which is also my business, I help candidates pass the insurance exam the first time. As of today, we have 100% success passing ratio. That's where we sit today, and we want to keep it. So we're going to do everything possible so that when you go out and take that exam, that you have the confidence that you need in order to pass that exam. So we had some questions. I put up 20 questions this week and said, hey, if you all want to give it a try, give it a try. And if you wanted the answers, just ask for the answers to them. And I sent those answers out to those people that asked, but I want to go over that today. All right. So I'm going to pull that up on my screen to look at those questions. And of course, I'm going to see if I can go to the right place. Of course not. All right. Hopefully everyone sees that. Okay. So we have 20 questions here, and I selected them randomly from a test that I had. Okay. So we have, if you get into one of our sessions in reference to, how to pass the test, the crash course, there is 400 questions. And so I just pulled out about 20 questions. So to give you a chance to kind of take a look at it. So one of the things that we practice, because taking a test, most of us haven't taken a test in so long, right? Most of us have not taken a test. So if you have not taken a test in a long time, then say, me, I have not taken a test in a very long time. So make sure that you say, me, I haven't taken one. When I finally decided to get my insurance license, it had been a while and I hadn't taken a test, and I did not have any skills, I think at that time. I didn't remember any. So one of the things that we practice in taking an insurance exam is sometimes just looking at the questions. Yeah, Ginger, I understand that if you have not taken an exam in a long time, it's a little tough. So one of the things that we practice is looking at the answers first. On this question, it says living benefits, waiver of premium, death benefit, cost of living rider. So my mind begins to think about all of the different things, living benefits. When they say living benefits, then my mind is thinking about those extra benefits that I can use while I'm living. So what benefit does life insurance have for people while they live? Waiver of premium. I know that that term goes with disability. I may not remember anything else, but I know it goes with disability. And the death benefit is the same as the face value of the policy and cost of living rider. I may not know a whole lot about a cost of living rider. So now, the question asks, what is the common component in all life insurance policies? And yes, Ginger, you are right. The answer is death benefit. So every policy has a death benefit. That is what is in common with all policies, is that they all have some sort of death benefit. That means face amount. So you're going to see those terms either way. Death benefit, face amount, they are the same. So let's take a look at question 125. It says permanent life insurance policies always have two components. And what are they? So looking at your answers, you got death benefit, cash value, living benefits, conversion benefits. Now, we want to be able to look at what two components. So permanent means that it is a what kind of policy? If they're talking about a permanent life insurance policy, they are talking about permanent means whole life. So when I look at a whole life policy, so I have to know when they use the term permanent that they're talking about whole life insurance. There's only two types of policies. There's permanent and term. Term does not have cash value. So when I look at these answers now, because we're looking at the word permanent life insurance in two components, then there's only two components that fit in there, and that is your death benefit and your cash value. And they ask for two. All right, so what has one and two? The answer would be D. Permanent. I have not looked at these answers after I put them on this paper, so let's hope I'm right each time. Permanent life insurance policies consist of both a death benefit component and a cash value. So now let's take a look at the next. Looking at the answers, you got rider, addendum, saving component, and an investment component. So what are they going to start talking about here? Ralph wanted his beneficiary to receive an additional amount of death benefit if he should die in an accident. Therefore, Ralph should add to his policy. So if I'm going to add something to my policy, then that's right, I'm going to have a rider. Very good, Ginger. You're going to have a rider added to your policy. That's what a rider does. It's something that you add to. It rides along with your policy that you have, your basic policy. So now we're looking at these four answers: cost of living, waiver of premium rider, advanced purchase privilege rider, guaranteed insurability rider. Okay, so now let's see what they're asking. John is concerned that if he becomes ill or disabled or loses his job, that he will not be able to afford to keep his life insurance in place. Which of the following riders should an agent advise John about? And so what I know from these things, okay, so first of all, let's say that I didn't know anything about them, right? Cost of living rider, waiver of premium rider, advanced purchase privilege rider, and guaranteed insurability. So two of these things may fit in, or let's get rid of two. So I think right here I can get rid of cost of living rider and advanced purchase privilege rider, because I have no idea what that is. But if I had to get rid of two answers and put it down to the other two. So waiver of premium, which I mentioned earlier, has something to do with disability. So I go back to the question and it says, if he becomes ill or disabled. So ill or disabled is going to make me choose the term waiver of premium. Guaranteed insurability, if they're talking about guaranteed insurable anything, right, that means something about somebody checking my health. So I definitely couldn't be someone that has lost a job or disabled, okay? So my answer here should be B, right? When an insured has a waiver of premium rider, should the policyholder be unable to continue paying premiums based on a qualifying disability or illness, the policy will remain in force without the premiums being due. In most cases, the insured must provide evidence to the issuing insurance carrier that he or she is ill or disabled. The cost of the waiver is typically made a part of the monthly premium amount that is paid by the owner during the regular course of the policy. So again, it's a rider that you would add on, and yes, there is a premium that would be placed there. So now we're looking at question 143. Which of the following is an additional type of coverage that can be included on life insurance policies as an optional feature? As an optional feature, let's see what this last one says, supplement. So Ginger, you're already out here answering these questions. You go now. So question 143, she is saying the answer is A, as a rider. A, as a rider. She is absolutely right, because a rider is something that you add in addition to your policy. Very good, very good. So now we have question number 144. What is another name that is used for a life insurance policy death benefit? So would it be face amount, cash amount, investment amount, policy amount? Well, we know it's not investment amount. We know it's not, okay, wait a minute. Another name that is used for a life insurance policy death benefit. Okay, I'm looking at these answers popping up here. That's right. So it would not be cash amount, but if you had to, no, it wouldn't be cash amount. If I had to delete two first, I would delete cash amount and investment amount. Maybe I would be confused at face amount or policy amount, but a death benefit that has two names, okay? Face amount and death benefit. So that is the amount of the insurance policy. That's the face amount of the policy. So I got $100,000 policy. That means I got $100,000 death benefit. That is the face amount of that policy. A, okay. Here's a long question with short answers. Robert is considering purchasing life insurance as part of his retirement planning. He is questioning how he will take care of himself and his wife if they become ill or need long-term care services. How will they afford it if a catastrophic event occurs? As Robert's agent, what rider should you discuss with him? Okay, so now it's telling you that it's a rider. All of these questions have a rider on them. And then we have some answers here, okay? So number one, we have waiver of premium rider. So waiver of premium rider represents if a person is disabled or ill, then you would have paid for a rider there. Then we have advanced purchase privilege rider. I am still not sure what that is. And I see someone has answered the number B. There's nothing that I can remember coming up in my book that says advanced purchase privilege rider. Accelerated death benefit rider. Accelerated death benefit rider. So we can use our death benefit. So the $100,000 life insurance policy you bought, then you can use you can ask the insurance company if you have a critical illness or chronic illness or something, and you can use that benefit to, boom, take care of any illness. So you can withdraw money from this policy while you live. And then we have a cost of living rider. I'm sorry. So what we would have here, again, we're going to be looking at the insurance. The question asks whether they become ill or need long-term care services. So accelerated death benefit rider is what we would have, because again, in the accelerated benefits, these are benefits that you'll be able to use while you live. Accelerated death benefit rider are benefits that you use while you live. So you're accelerating, taking money out of your face amount so that it can take care of your health issues if you have them. So with this rider, the insured may collect some of or all of the face amount of their life insurance policy, provided they meet the illness or long-term care qualifications. The death benefit on the life insurance policy will subsequently be reduced by the amount the insured withdraws. So you all had a bunch of different answers here, so the answer for this, and I don't see anyone with C, okay? So again, understanding the accelerated death benefit. It tells you you can withdraw money from the face amount of the policy while you are alive. What you would do is, if you have a critical, chronic, terminal, or some of these policies have long-term care in them, will allow you to pull money from the death benefit. And of course, I always tell this story in reference to, I wish my father would have had something like this, because if he would have, he probably would be alive today. So I'm going to tell this story on two ends. Number one, all of these entrepreneurs that are out here that do not have a life insurance policy. Now, let's take this accelerated death benefit rider and be able to talk with business owners that need to have something like this. All right. Number one, why is it important? Because if they buy a life insurance policy, let's say they have one for $200,000 or let's say $200,000, right? Something unexpected happens. Let's say they have cancer or a heart attack or stroke, and they're still, maybe they're in their 50s. My dad was in his 50s when this happened, and he was self-employed. So he was in the hospital for 20 some days. Then he came home. He was supposed to recuperate, but because he was the breadwinner in our home, he went back to work as quickly as he could so that our household would not suffer. But if he had the accelerated death benefit that would be a part of the insurance policy, he could have taken out $50,000, $70,000 from his $200,000 life insurance policy, be able to keep his home afloat without having to go back to work, and even had someone to come in and, take care of some of his health needs at that particular time. So just think about the number of people. Again, I'm going to just use entrepreneurs at this time in our lives, may not have something. So who is going to take care of them if they have a stroke or a heart attack or need some type of long-term care assistance? So today we take care of our parents in our homes, right? So if something happens, we take care of them. Medicare does not cover this. Medicare doesn't cover long-term care, right? So how does a person take care of themselves if something chronic happens? This is another piece. When I ask you about what are you going to do in this business? What are you going to sell? How are you going to make money? What is your niche? Then here is another whole market where you can focus in on to sell to people, talking about the accelerated benefits that are in life insurance policies now, because so many people don't have them. So many people do not have them. But where are you going to get that money from? And if any of you have ever had to take care of a family member, you already know the type of issues and hardship that brings on to a family. So again, I've answered what accelerated death benefit is. We've answered the question and a niche in the market. Okay, so I gave a lot of gems away today in reference to that. Okay. 146, in comparison to whole life and universal life, which of the following components in a variable insurance policy deem the policy as being more risky than other types of coverage? So what makes it risky? Ah, yes, Ginger, you're right. The investment aspect of this makes it risky. So as a life insurance agent, we don't sell variable policies. Those are for those people that have some type of a securities license. Most times when you see the word variable in a question, it's going to usually have one of those answers that have securities in it. All right. Yeah, she answered it pretty quick, didn't she? Yeah. Okay. B was investment. Okay. 147. A grace period allows the premium payer a period of time to reduce overdue premiums. How long is a grace period typically? So if you see grace period, then you got to know grace period is 30 days. All right. Now, if you're taking that health portion of the exam, if you're taking the life portion, is always going to be 30 days. But sometimes when grace periods come up and on the health portion of the exam, it's going to matter based on how, if they're paying a weekly premium or a weekly, I think it's bi-weekly, monthly. And so the grace period is different when you pay premiums more frequently. Okay, so the grace period can be different if you're paying the premium more frequently. All right, but answer most times is going to be for 30 days. A monthly premium is going to be 30 days. Okay. Number 148, this policy writer applies money from the cash value of a policy to cover overdue premiums at the end of the grace period. What's the name of this rider? Okay, so we have waiver of premium rider, waiver of premium rider. Waiver of premium would deal with disability. B, accidental death benefit rider. Accidental death benefit, that means I got to have an accident in order for this rider to kick in. Guaranteed insurability rider means that, hey, I got to be guaranteed insurability means that I want to get some, I want to have this rider in here. So in the event that I want to add some additional money onto this policy, so I want to increase my policy to $20,000 or $30,000, I don't have to check whether or not I'm insurable. And then you have the automatic premium loan rider. Yes, that's right, Mimi. It is automatic premium loan rider. So this policy rider applies money from the cash value to a policy. So I want you to make sure that you focus on to cover the overdue premiums. So that means that they've already gone through the grace period. 30 days has passed. And now they're like, hey, they haven't paid yet. So your insurance company, the insurer, will take a look at the cash value in the policy. And if there's cash value in the policy, then they'll go ahead and take the premium from it to make sure that this policy doesn't go into, doesn't lapse, okay? They want to make sure that the policy doesn't lapse. Now, another thing about you guys, when you all take these exams, okay, and when you are practicing. So let's say that we got this one wrong on our practice test, right? Now, our brain has a way of working that makes us stay on the wrong answer. You have to really focus in on the correct answer. So if you answered the question A, a waiver of premium, and then find out that the answer is D, you really do need to read all of the answer, understand it, go back and read this question again, and only focus on D, automatic premium loan rider, because the brain is already focused on A, waiver of premium. That's the answer it gave you. That's what it began to focus on. So now you read the answer. The automatic premium loan rider will tap the cash value of a policy to ensure it stays in force, even if the assured neglects to cover overdue premiums within the grace period. This rider will keep a policy in force as long as the cash value available can cover the overdue premium amount. A guaranteed insurability rider allows an insured to increase the amount of death benefit at certain times or milestones in their lives. So it gave you two answers, right? It gave two explanations. So, whoa. Say, wait, brain. Okay, I need to focus on automatic premium loan rider, how this question was laid out, and then that's the answer for this question. I understand, okay? Because again, the brain will have this question come around again. And when it comes around, especially when you're doing these automated tests that they have online and stuff, and you don't pass it or you retake it, your brain will still focus on the wrong answer. So I don't really like for you all to take a whole bunch of these practice tests, because that's how your brain works. You got to get it to focus and know what you are doing. When am I going to have another review? Another review on what, Renee? Okay, 186. What type of annuity is most often used to structure the payment of lotteries? Y'all see the answer also. Lottery prizes and insurance settlements. And so this is talking about an annuity. Okay, an annuity. Why am I talking about, so when they're talking about when they're talking about the structure of an exam, structure of a lottery, that means that they're paying it out over a period of time. Okay, it says what type of annuity is most often used to structure the payments of lottery prizes and insurance settlements. Okay, so what they do is they take that one lump sum. You got a lottery prize, a one lump sum, and now you want it paid out. So they take that one lump sum, a single premium immediate annuity, and they place that so that it can be paid out however you choose for it to be paid. Okay, let's take a look at 187. All right. This payment option allows for a guaranteed income during the annuitant's lifetime and pays a lump sum cash refund to the beneficiary if the annuitant dies before exhausting the funds. So what is this one? This payout option. So again, you got to be very familiar with how things are paid in and what is paid out. Okay. I got a C here for one. All right. Anybody else want to answer this question? This payout option allows for guaranteed income during the annuitant's lifetime and pays a lump sum cash refund to the beneficiary if the annuitant dies before exhausting the funds. Oh, D. All right, so let's take a look. D, as implied by the word refund, the cash refund payout option refunds any remaining funds to the listed beneficiary. The installment refund payout option would pay the remaining funds to the beneficiary in the same installments the annuitant receives before death. All right, so you got to look back at it because everybody got this one wrong. This payment payout option allows for a guaranteed income during the annuitants. So the question on the end is if the annuitant dies before exhausting the funds. So you all expect it to be income payout option, cash refund. Yeah, I cash refund. So they got to be able to refund refund that payout, okay, in the same installments. Okay, let's move on. Now this one is talking specifically about, right, the question has the answer in it. It did. With a straight income payout option, now they're asking you a question. So here, you got to understand straight income payout. What is straight income payout? Here's your A. Oh, nope. There's B. Sorry, y'all. Here's C. And there's D. What is with a straight income payout option? Any answers? Payments will cease upon the death of the annuitant. Payment will cease upon the death of annuitant. A straight income payout option is designed to provide a guaranteed income during their lifetime while allowing protection against exhausting the funds prematurely. The trade-off is that any remaining funds will not be paid out to anyone upon the death of the annuitant. All right, so now we're going to move. I think this is probably the last one. One main difference between a variable and a fixed annuity. Okay, so anytime you, again, I don't know about any time, but most times when you see the word variable in a question, you should be looking for something that talks about securities, SEC, something that talks about securities. So before I even looked at the question, I saw the word SEC come up. SEC, that's for the securities and the state. And so I would answer D automatically. I wouldn't even look at the rest of those things. I don't know. Let's see what the answer is. 189 is going to be B. So that's what my guess would have been automatically without looking at it. Okay. Fixed annuities are duly regulated by SEC and the state, while variable annuities are not regulated by SEC. Oh, that is definitely not true because variables are by the SEC. So I should have read the question and the answers. B, variable annuities have cash value that depends on the results of investment funds. But again, doing that, it are the mistakes that we make, okay? And I just made a huge mistake because that is just one of those things that I know that usually shows up on the test, right? So reading is fundamental, y'all. Reading is fundamental. Reading is fundamental. So in order for us to make sure that we not answer the wrong, answer it incorrectly, is to make sure that we read it, okay? So variable annuities, that's the difference between, one main difference between variable and fixed annuities. Variables are going to be talking about investments, always, okay? Fixed are a whole lot more safer. Variables are going to be in the stock market, so it's going to be dealing with investments. All right, L190, okay? Which of the following is not an annuity payout option? Which one is not an annuity payout option? So everything else is, there is one that is not. So I'm going to wait on you guys to answer, because most times you all have a lot of trouble with these annuity questions. Which of the following is not an annuity payout option? An annuity payout option. A, straight life income payout. B, cash refund payout. Straight life refund payout. Installment refund payout. Which one? A, B, C, or D? I'm waiting. Ginger, is that a B from you? On question 190? Very good. All right. Very good, Mimi. Straight life refund payout. A straight life refund payout is not an option. Payout options include straight life income. I was looking for the options here. I was looking for like, if they were put in a certain order, they would write out a particular word. Okay, cash refund, installment refund, life and period certain, and period certain. Okay, so let's take a look. And I got joint. Okay. All right, what are two primary classes of life insurance? Two primary classes of life insurance. You guys ought to know this. There's not variable and universal, right? So is it term and permanent? Is it whole and universal? Is it term and universal? Right, it is going to be term and permanent. Number 47 is term and permanent. So let's take a look at 48. It's a long answer, so you would make sure that you read it and understand it before you move on to the next question, because our brain needs to have in the right answer. All right, let's look at this. Which type of life insurance offers only pure amount of death benefit with no components for cash value or investment funds? If we're not talking about cash value, then no component of cash value. What type of, I guess that word should be type of life insurance, it got life insurance, offers only pure amounts of death benefit and no component of cash value. So your answer should be D, term. Term does not offer any type of cash value in it. You should get that answer every time, term. Bob wanted to purchase life insurance coverage. He recently suffered an adverse health condition. What type of life insurance will Bob have the easiest time qualifying for? Answers: individual term, group term, individual whole life, individual variable. So the one thing that he would not have a problem with, okay, he has some kind of adverse health condition. So what type of life insurance? My mind went to final expense. However, final expense ain't got nothing to do with our exam, y'all. That's just because you know something about insurance. And so you start thinking, no, that couldn't be it. So individual term, they're still going to check your health condition. Group term, they're not going to check my health condition. Individual whole life, they are. Individual variable, they will. So the only answer here could be is group term insurance. So group comes from your job. So, and your group policies are not based on an individual's health. That's what makes them so wonderful. That's how come we like to have a job that has insurance on it, because nobody's going to be checking. But what they do is they look at the, the health conditions of the entire group, the gender, the age, everyone in the group. Okay. All right. And then 51 has two answers here. Blank life insurance policies are usually less expensive than so-and-so policies, than blank policies. So they have group and individual. So group life insurance policies are usually less expensive than individual policies. That may be true. All right. Individual life insurance policies are usually less expensive than group. That's not true. Variable policies are usually, what do y'all say? Oh, I got A. Okay, so I got to read this last one. D, whole life policies are usually less expensive than term policies. So we absolutely know that they must be talking about group and individual, right? Because we know that term policies are usually less expensive than whole life policies. All right, so A was our answer here. And then we have 52. 52. Oh, I keep moving this thing. Y'all get to see the answer. Which type of life insurance coverage offers the least expensive cost per 1,000 of death benefits purchased? When they talk anything about least expensive, more than likely they're talking about term life insurance. Term is usually the least expensive cost for policies. Least expensive is going to be term. And I think that is all of them. Yay, we have finished. All right. So hopefully that was some help to you when you are, practicing with an exam. I think the tip here, more so than anything else, is that when you go through the exam and answer questions and get them incorrect, then understand what is correct. When they give you that information and tell you, you need to read the question again and make sure that you truly understand why the answer is. I'm gonna tell you what we practice doing. We practice going through, seeing that the answer, yeah, okay, that's it. And then we move on, but we didn't stick it in our head. And so I'm telling you, when you roll around again to that question or something like it, guess what happens? You answer it wrong again. So you have got to work on keeping the correct answer and knowing why it's different or why that answer is, okay? Woo! I'm kind of worn out today. I had such a fantastic day being at a women's event out here in San Antonio. So I've spent the day being motivated, uplifted, and energized. And so I'm excited about being with you today. I have so many great things I really want to share. And I think I'm going to stop for tonight at one of those tips. So if you are interested in taking a crash course with us, whether it's life and health or property and casualty, then you can go to our website, and I will throw that into our chat so that you have it. But I believe it's courses.getskills.com/crash course. That's what it is. /crash course. And you can come into doing the crash course. The crash course is 4 to 6 hours, really kind of depending on what you need. It is also, we also have pre-licensing courses. Our pre-licensing course is 40 hours. I know in some states, you all are normally in Texas, most of you take the class for about 20 hours. It's a lot of info. In Georgia, we take the class for 40 hours. So it's totally up to you. We're going to bring it over a 4-day process so that you can really get this information, have it in your head so that you can pass the exam the very first time. And that's what we work on. That's what we want you to do. This is a $1 trillion industry that we are so excited that you're interested in coming into this market. And we want to definitely help you establish yourself in this career. And we have a lot more coming. We are going to start having some videos of the classes and different topics coming up. But just know that what we do live here in our Zoom, we're trying to give you as much as we can at zero cost to you. But we're going to have some other things that are going to be coming up, trying to make sure that you have some tips that you need and actual things in order to pass the exam. So tonight you should have learned a little bit about the annuities. You should have learned a little bit about group insurance, the sideways backwards video that I have there. I shared another tip for you to focus in on what you want to sell. Okay. And I did that again tonight, just kind of having you look at what your niche is going to be in this market and what you need to know. So you guys kind of decide. We'll work on that as time goes on. Just wanting you to know that we're here. My name is Tanya Scott Pilcher. I am your insurance professor, and it has been an absolute pleasure to share some testing tips with you tonight. We'll be back next Wednesday. And when I feel the motion and feel the energy, you know, and excitement that I want to share something else, I am going to come live and share it. I think I'm going to come live, continue to come live on through the Zoom instead of with my camera, because I messed that up so much this week. Oh, I had the pleasure of meeting Tanya Swain today. So hello, it was a pleasure meeting you. Who would have known that we see one another on the computer? I didn't even know that she lived here in San Antonio, but had the opportunity to meet her today. And you know, we're going to keep doing what we do. And I want to say thank you for joining. Have a wonderful evening, and I will see you next Wednesday. Have a good one. Good night.